usually gets it wrong. It's very rare that retail investors are right about anything. And, you know, and so since they've never been this wrong about gold, then gold is probably on the verge of its biggest rally. And the reason that gold's gone up, despite the fact that the public is dumping whatever they have, is because the central banks are gobbling it up. The central banks aren't buying silver. The central banks aren't buying gold stocks. And I posted on X today that I was looking through some of this research. It is crazy. All the Wall Street firms, when they rate these gold stocks, they assume the price of gold is going to be much lower in the future than it is now. So they have no confidence in this rally. And that's why they don't want to buy gold stocks, because they expect the price of gold to fall, even though it's going to continue to rise. But anyway, I'll also take whatever questions that come up.
Hey, Peter, it's Alan here. Can you hear me?
Yeah.
So, Peter, I see some big things happening in gold that I really think you're right. Nobody's paying attention to. The biggest one that's been driving it for a long time is the debt situation. I call it a death spiral of debt. I don't see how, even with all of Elon Musk's greatest efforts, I don't see how that's changing. And then you've got these tariffs. Another big thing I think is happening is I don't think people are looking at the stagflation problem that's starting to evolve in the United States. In real terms, stagflation is already here in the United States, but it's all over the world. And that is
Yeah, and that's why I pointed this out. That's why Powell says the Fed has no plans for stagflation,
oh,
and they're just going to hope we don't have it. That's why in their stress tests, they don't even stress test for stagflation, because they know every major bank would fail. So stagflation is basically like kryptonite to Superman as far as the Fed is concerned. And that's exactly what we already have. And it's going to get worse. And yeah, the debt is a huge problem. Waste, fraud, and abuse is the tip of the iceberg of the debt problem. And
exactly.
and everybody wants to talk about, let's get rid of waste, fraud, and abuse. That's great. And so far nobody has been able to do it. So it would be fantastic if the Trump administration can actually get rid of some of the waste, fraud, and abuse. They'll never get rid of all of it,
Even
but
what they're talking about is a drop in the bucket. They can't go over the major things. They can't go after Social Security. They can't go after Medicare and Medicaid. They can't go after the defense. They can't go after the debt, the cost of servicing the debt. Right there, those things all take up all
right.
revenue from
Plus,
taxes.
the government guarantees all the bank accounts. The government guarantees all the pensions. The government's guaranteeing everything in this country. And if we do the right thing, pensions are going to fail. Banks are going to fail.
That's
And
going to
so
fail.
the government would have to level. See, the people are only in favor of shrinking the government so long as they don't think it affects any of their benefits.
Exactly.
Right. And so, yes, and that's how Trump got elected as a populist. He didn't get elected as a conservative. He didn't get elected as a libertarian. He got elected promising everybody it would be great.
Yeah.
We're going to we're going to drain the swamp, which he promised before. We're going to get rid of waste, fraud, and abuse. And, the world is going to stop taking advantage of us, which is laughable because it's the other way around. We have been
Look at
taking
Canada.
advantage of the world.
Look at Canada. He says, "Oh, this is the worst trade deal ever." He signed the bloody trade deal. He's the one who did it. Now he's saying it, and then he said it
I
was the
know, and he
greatest.
said it was the greatest. He said it was the greatest trade deal ever when he replaced NAFTA with it. But anyway, I agree. Look, no, people are so clueless regarding what's going to happen here. But the thing that bothers me a lot about it is that this big recession that is so long overdue, that already started. It started under Biden, but the media and Wall Street covered it up. So they're pretending that Trump inherited this great economy. And so when it collapses, they're going to blame him. But he inherited a disaster. It just, just unfolded more while he was president. But again, he doesn't have completely clean hands because he had a hold of this thing for 4 years, right? He was president while the bubble got bigger. And, he claimed that he made America great again when he was president the first time, but he just helped the
with
bubble get
$8
bigger.
trillion of debt. Peter, I got one quick more comment that I just wanted to hear your feedback on. I've noticed something since January in the gold stocks. I'm starting to see breakouts, not only in the best in breed gold miners like Agnico Eagle and Alamos, but I'm starting to see breakouts down the food chain all the way into some of the explorers with important discoveries. This is very
Yeah, the
exciting.
big moves that I'm seeing. Look, if you look at and I own all these stocks myself. We own them in our value fund and our dividend payer fund at Europe Pacific. But Agnico Eagle and Alamos and Kinross and I Am Gold and
But
Franco
even the
Nevada.
equinoxes are starting to move now, and the
Yeah,
orlas and they're
yeah,
having
yeah.
big breakouts. It's pretty awesome.
The mid tier, the only ones that haven't really moved yet are the big ones like the Newmont and the Barrick, and that's what's kind of keeping a lot of the rally under the surface. But a lot of the real junior exploration stocks, they haven't moved yet. I mean, the ones they're going to. But look, people, there were net liquidations all last year. Every quarter, the retail public sold GDX and GDXJ. It was nonstop selling of gold stocks as gold rose 50%.
Yeah.
Uh, you know, and so as I said, I've been in the industry for over 30 years. I've never seen a market like this.
But even
I've
Peter,
never
even
seen.
in the explorers, Goliath Resources, Power Nickel, these things have broken out by 100% since the bottoms in
Yeah.
January.
Well, you're going to see. This is not just a precious metal. You're going to see copper. Look at that copper chart. It's copper. I mean,
Exactly.
but it's zinc. It's nickel.
Silver,
All these metals are
silver.
gonna go.
Thanks, Peter. You're
All
awesome.
right.
Take care.
Thank you.
Bye bye.
All right.
Hey,
Who's next?
Hello, Peter.
Yeah.
It's Neil here, as known as Badaman. Love your podcast. I wanted to ask you what you think that the real true ratio of silver to gold should be. I mean, currently it's at 94, as you mentioned, above the.
It's not quite 94. I think it's like 91, but it's
Yeah,
pretty high.
yeah, it's extremely high, right? What do you think the sort of natural floor is?
I don't know. I mean, I don't know what it should be. I just know historically what it's been. But it makes sense to me that when central banks buy gold and not silver, that it's gold that's going up. But when the public finally gets back into the precious metals market, which they've been completely absent from, they are going to be buying more silver. And the price is going to go up. Meanwhile, I mean, I think there's still a lot of shorts in silver that are going to need to cover. And there are probably a lot of people that have been buying gold and shorting silver. That's been a winning trade. So they're in there. So I think they're going to have to unwind that short leg in the silver market. But it's just like the gold stocks. I mean, to me, I think that when silver really starts to move, the mining stocks are going to really start to move because that's going to show that it's just not central banks that are driving it. Now, central banks are going to continue to accumulate gold. I think they're going to increase the pace, especially when the US dollar starts to fall. That is the most significant thing about this rally is that gold is going up when the dollar is strong against the euro and the pound and the Aussie and the Canadian and all these currencies, the yen. But when the dollar really starts to get hit, that's when gold is going to start moving up, $100, $200, a day. We're going to start to see much bigger moves when it's happening with a dollar weakening on the foreign exchange markets.
Okay, thank you.
hey, Peter, I have a bit of a more fundamental question for you.
Yeah.
Yeah. So, if yearly inflation was actually 2%, would that actually be something that we would desire, or are are you still of the opinion that like the gold standard would be like much better to like go back to actually like fix the US dollar?
Well, I mean, 2% inflation, again, when they're talking about inflation of 2%, they're not talking about inflation. They're talking about prices. They're talking about prices going up by 2% a year. Inflation is the rate at which the money supply is expanding. That's really what's being inflated. Prices simply respond to the quantity of money. And also, the quantity of money is influenced by credit, too, in today's economy. So it's not just the physical money, but it's credit. And so we have a big expansion of money and credit, and that fuels price increases. But to say that there's some kind of ideal rate at which prices should rise every year is complete folly. It's nonsense, and it was just made up by central bankers. And the only time they started talking about a 2% target was when they were below it. No central banks were talking about getting it down to 2% when it was 3 or 4 or 5. They only invented this concept when they were able to report inflation rates below 2%. And the only reason they could report rates that low was because the governments were lying about it. They had these rigged indexes that purported to measure in prices, and it was all, rigged. And so they get this phony CPI that says 1.5% inflation when it's probably, 3 or 4. And they say, oh, look, it's below 2%. We need to print a bunch of money. We need to cut interest rates because we're not at our target, right? That was all a bunch of nonsense. Zero prices remaining flat is better than prices going up 2%. Prices going down 2% is better than prices going up 2%. There's nothing special about prices going up by 2% every year. So and nobody really called these bankers out on it. I mean, the media, academia, Wall Street, I mean, everybody just accepted this lie that these, money magicians is somehow concocted out of thin air that prices have to go up by 2% every year.
Yeah.
Like,
So like,
I mean, it's so nonsense. Like, so 1.5% is bad. 2.5% is terrible, but 2% is just right. It's perfect. It's just nonsense.
so we've sort of been in this like paradigm for what, like 100 years since the Fed showed up. So like, I'm not really familiar with like pre-Fed sort of economy. So like, is the natural state, if there's no actual like CPI target and the Fed isn't printing money, like are the boom and bust cycles just sort of like what we need to accept, or
No, the boom and bust cycles are mainly caused by money supply and credit. The government causes boom and bust. It's not like you would get boom and busts within industries. I mean, that would be natural, but the entire economy would not boom and bust, but for artificial manipulation of interest rates by central banks. I mean, it wouldn't happen. And in the business cycle that the central banks create, the busts are actually the good part. That's when the market is fixing the mistakes that are created during the boom. So the recessions, the busts, should be embraced. That's like, checking into rehab, right? And getting the drugs out of your system, right? But the politicians, the central bankers always try to mitigate what the market is trying to accomplish. No, we wouldn't have booms and busts if we had sound money. If we're on a gold standard, we'd have a much more stable economy, and prices would fall over time. Goods prices would come down. Just like we see with electronics, right? We see it in cell phones, we see it in TVs and stuff like that. But if we had a real free market with sound money, we'd see it. Healthcare would be coming down every year. Education would be coming down every year. All the things that we buy would be getting cheaper every year, and we would all benefit from that, right? That's how your standard of living improves. You can buy more stuff. Stuff is more abundant, and so it's less expensive. That's what the free market does. It lowers price and increases quality. But the government interferes with that benevolent process. And they take advantage of the fact that the free market would lower prices by creating inflation and then robbing us of those benefits that we never even knew that we were going to get. It's a very surreptitious way for the government to take our money. is to just take our purchasing power that we didn't even know we had.
Gotcha. Yeah, that makes sense. I have one last question. This one's a little bit more far out there, but like, so say it's like 2050 and we're, landing rockets on Mars, and, we find a bunch of, platinum, just like, just tens of thousands of pounds. And so like, how does a gold backed currency sort of respond? Does a United States dollar based on gold scale well once we start like finding resources that are worth like way more than all the gold that we have on Earth? Or
well, there's not a lot of gold in the solar system. I mean, gold is very scarce. I mean, it was all created during the Big Bang, and so you figure, it was distributed the way it was. I mean, there may be some gold on other planets, but I'm sure it's very expensive to extract it. Probably easier to try to find more on Earth. But as the economy expands, as the population expands, the supply, the amount of gold can expand. But the thing is, as we get more sophisticated, we develop more uses for gold. There are a lot more uses for gold today than there were 100 years ago. And so the demand for gold goes up. I mean, not just the monetary demand, but the real demand for the precious metal that's gold. I mean, I'm sure that if we are, traveling in space, we're probably going to need a lot of gold in those ships. Yeah.
Awesome.
Who's next?
Thanks for your time, Peter. Appreciate it.
Yeah.
Can you hear me?
Yeah.
Hey,
All
hey,
right,
Ken, 1 second, Justin. Sean's had his hand up for a minute, actually. Let's go to him first, if that's all right.
Of course.
Hey guys, Sean here. I've been selling gold and silver over the counter for a little over 2 years now. And it was so funny to me that when prices were $20 and $21 an ounce, I would just pile it up in the back room because nobody wanted to buy it. And I just noticed last weekend, silver demand on the retail side just skyrocketed. I sold more silver in one day than I probably sold in the last 3 months. Why is it that the retail sector sits on cheap silver? Matter of fact, sells it by the boatload to me at cheap prices. And then when it skyrockets, they come back in to buy it. It seems such opposite thinking to me as a retail seller.
Well, I mean, look, I mean, people usually get nervous when things go down, and they get greedy when things go up, right? When they want to buy the momentum, and if there is no momentum, the Fed has created a very speculative mentality that people have, and people expect they want to hop on a moving train, right? They don't want to wait for it. But I mean, I haven't seen that, in our business in Shift Gold. I mean, we haven't seen a big rush of buyers. I mean, we've more seen an increase in sellers. We've been doing more buybacks where people have been selling, and not necessarily gold and silver that they bought from us. They could have bought it from someplace else, or they've had it for a while. And I know a lot of people need money too. I mean, that's part of the problem, is that the cost of living has gone way up, and people are trying to raise money. People have maxed out their credit cards, they have a lot of debt, and so one thing they could do with $3,000 gold is sell some of it to help pay the bills. And I think that's happening. But what I haven't seen is the investor demand, right? People who are getting rid of their treasuries or other debt instruments and buying gold, which is what they should be doing, because the yields are negative, on that debt. The real yields are negative. Inflation is higher than the interest that they're earning. And a lot of these stocks, the valuations are ridiculously high. People should not be buying these overpriced stocks, but they get more overpriced, so people just stay in them because there's like a real separation between price and value. I mean, and nowhere is that better exemplified than in Bitcoin or other cryptos, where you have all price and zero value, where you have basically worthless tokens. And I think what's going on now, with these meme coins, and you got Trump coin and Melania coin and fart coin and who knows other million coins. Everybody's launching coin after coin after coin to really show the absurdity of this, because everybody can launch a coin, that has a limited supply, just like Bitcoin. That's secure. that works on a blockchain, right? There's so many of them because they fundamentally are nothing. They're just a big belief system, a faith system. Bitcoin is the ultimate meme coin, right? That's because there's no difference. It's just a more popular meme than a lot of these other ones. So people are not buying what they should buy. They're not buying value. They're not paying attention to what's going on. They're just buying what's going up. And because it went up, they think they've done the right thing. And they think they're smart. And they think the people who aren't buying it are dumb because they're missing out, right?
That makes sense. Yeah, we're obviously at a different scale than you. We're selling ounces, 10, 20, 100 ounces is a big sell for us. We're also buying more than ever, which always happens when the prices spike. But this time we're starting to see these guys coming in to pay cash, on a weekly basis to buy 10, 15 ounces of silver because they believe in it again.
Yeah, I mean, look, at some point it's got to move here. I've been telling people that I thought $30 silver was pretty much the floor. Not that it couldn't go below. I said, look, you can go into the 29s, but about 30, I think $30 silver to me looks a lot like $2,000 gold was looking. And I was telling people that for months to buy $2,000 gold because that's the bottom. And people were selling it because they were convinced that 2000 was the top. And I was like, no, this is the new floor. 2000 is the new 1000. I mean, we're building a base and we're going higher. But at some point, the price is just going to move up much more rapidly than it is. I mean, people buying gold now at under 3,000 to me is still a no-brainer, and buying silver at under 32 is very easy. Where it's going to be difficult is when people have to buy silver at 100. Now, it's probably going to go a lot higher than 100, but it's going to be a scary thing to buy it at 100. And you might buy it at 100, and the next thing you know, it's 80, and you're down 20% or 70. I mean, I'd much rather buy it at 32 when I know my downside is a couple of bucks than wait and buy it at $100. Or wait for 5,000 or whatever gold, and when it's going to be a lot more volatile and a lot more scary for people to get involved, because the volatility is going to pick up when this thing really starts to move. And then what's going to happen is, the markets will try to shake people out. So there'll be people that buy $100 silver, and then when it goes to 70, they'll sell, right? Because, oh shit, I better get out before I lose everything. Right. So I think now it's a much better place to be positioned, because I don't see a lot of downside risk because there's not a lot of speculative money in these metals yet. The speculative money is going to eventually come in, but it ain't here now.
Do you think that the LBMA will have similar issues with silver as they currently have with gold?
Well, I mean, we'll see if it is an issue with gold, what happens. I mean, I've been saying for years that I thought that eventually you were going to see the long positions on futures exchanges delivered. That there's going to be big buyers that are going to go into the COMEX or the London Metal Exchange. They're going to buy these futures, and then they're going to take delivery of the 100-ounce bars of gold. And that's going to ultimately blow up the market because they're going to run out of metal. And then they're going to have to rush to buy more, and the prices are just going to go through the roof. And I think that will happen with silver too. That there will, they'll try to take delivery of these contracts, which everybody who owns the silver's future contract has the right to deliver. And taking delivery of metal is a lot easier than taking delivery of like live cattle. I mean, you gotta have a place for the cattle. You pretty much have to, be a rancher or something. Because remember, when oil prices went negative during COVID, it was because you had to have a place to put the oil, right? If you don't have a place to put the oil, how do you take delivery of your oil if you have no place to put it? But everybody has a place to put gold. I mean, gold is not that hard. Just send it to my house. I got no problem. I can't have them deliver, live cattle to my house, but I could take gold.
Do you subscribe
So
that the U.S. is repatriating its gold reserves? Do you think that's what we're seeing happen, and they're kind of forcing the implosion intentionally?
no, I don't think. I mean, I don't mean the U.S. government's reserves. I don't think the U.S. government's. I think our reserves are here, right? They're in Fort Knox, right? That's where they're supposed to be. It's a lot of other foreign countries that have some of their gold reserves here with us, right? At in the U.S. They might, they're the ones that might want to bring their gold home if they don't trust leaving it with the United States. But this may be private, people taking delivery. It could be foreign central banks. Maybe they have positions and they're trying to get to physical by taking delivery on futures contracts.
QTR, your hand's been up.
Oh, quote the Raven.
Shit.
Hello,
There you go. How you doing, buddy?
Chris. What's up?
Hey, how you doing, Peter? Listen, man, just two things. First is, look, I think like you're halfway there to like being just proven demonstrably right. Of course, gold is at all-time highs. So anytime you've ever said to buy gold in the past on a nominal basis, you've been 100% correct, effective like an hour ago. So that's got to feel good. The next thing that's going to
Well, I
happen
mean,
is the next.
it's basically 10x since I first started telling people to buy it as a professional in the late 1990s.
Well, the next thing
It
that's
was
going to happen
it's
is
10x.
the next thing that's going to happen is people are going to start comparing its performance on a month basis, on a year basis, on a 12 versus the S&P versus Bitcoin, and it's going to get there. It's going to do just fine, and I think the miners are going to do even better. The one question.
Well, gold is already beating the S&P going back to 2001 or 1998, 99 timeframe. So from that point, it's already beating the stock market, but it's not beating it over a smaller time horizon. Let's say 5 or 10 year time
But
horizon.
it will.
But yes, of course, it will. It is. There's no question that that's going to happen. I think the S&P is going to crash in terms of gold. I mean, I think it's just going to get completely obliterated, priced in gold.
It has to. It's long overdue. But let me just ask you my one question, and then I'll be on my way. I think I stumbled onto the discussion you were just having. You were talking about all of the COMEX, the amount of gold in the COMEX vaults, which is just skyrocketing, over the last few months. But in the same vein of like, is something breaking? I wanted to kind of ask you what you think about the bond market, because this 100 basis point divergence with the federal funds rate is the bond market really screaming that there's a problem. And I'd just be interested on your thoughts. What happens if, for example, the 10-year yield, keeps going, goes to 5, goes to 5.5%. What happens in a situation like that?
Well, we already know what started to happen and what caused the Fed to stop hiking, right? It wasn't that inflation wasn't no longer a problem. The Fed stopped hiking because banks started failing. And so if the Fed were to allow yields to rise where the market wants them to go, which is where they need to go, a lot more banks would fail, including some very big banks, right? Maybe all the big banks. So in order to prevent the banks from failing, the Fed will have to prevent yields from rising. And there's only one way they can do that, and that's to buy bonds. But they have to create inflation to buy bonds. And so they have to sacrifice the dollar to save the banks, which is why I've always said that if you have your money in a bank, you lose no matter what, right? Because if your bank fails and the government doesn't bail it out, you lose your deposit. The money's gone, right? The FDIC insurance isn't going to be there. On the other hand, if the Fed bails everybody out, then your money isn't worth anything or very little. So you either lose the purchasing power of your deposits or you lose the deposits. But there's no way to win. That's why I've been telling people you pull your money out of the banks. And if you want savings, you got to keep it in, gold or silver. You got to keep it in real money and not in dollars, because it's a no-win situation for you. Now, you could also make investments. You could buy real estate. You could buy value stocks, that pay good dividends. I mean, we buy stocks for our clients all around the world as a place to store wealth and generate income. And you can spend the income, or you can use it to accumulate more income producing assets. So you can spend the greater income later. But you can't, unfortunately, leave your money in the bank, which is a problem, because in order to grow the economy and manufacture, we need capital. So we need savings. We don't have any.
Yeah, excellent. Thanks. I'm gonna be in PR soon, so I'll shoot you a text. All right.
All right. Well, yeah, welcome. We have nice weather.
Hey, Peter, how you doing?
Good. Who's talking?
Greg Crennan, fellow economist like yourself. I just want to say you've been probably one of the most honest and forthright economists out there. So, and I appreciate your work that you put out as well for people to read and inform themselves on. My question to you is based on some of the previous conversations that you were having on like stagflation, inflation, where the economy is going. What do you see, or how would you like to compare with you your thoughts on Trump becoming Herbert Hoover 2.0 with the trade war, and how the market and everyone is actually not taking this as serious as because of trade war 1.0 wasn't that big of a deal, but the way that things are already starting out, that this is going to be a lot more escalatory in response than many people are anticipating, in my opinion.
Yeah, I mean, the knock on Hoover, Hoover obviously got blamed for the Great Depression, and Hoover is not blameless in that, because Hoover made a lot of mistakes while he was president. And when Roosevelt ran against Hoover the first time, he criticized Hoover's deficit spending. He promised to balance the budget. And of course, he did the opposite. I mean, basically, he copied Hoover and just expanded on all the mistakes that Hoover made. I mean, Hoover went down the path of bailouts, and government has to prop things up and mitigate the decline. And so it was the government that created the depression, but kind of capitalism got blamed for it. And we ended up with all kinds of socialistic programs that were born from the Great Depression. Social Security that we have today, was created during the Great Depression. And minimum wage laws came about.
Well, when
during
when
the
the smooth Trade Act was implemented, global trade I think dropped like 66% because it became a tit for tat between the U.S. with the Smoot-Hawley tariffs, which actually was implemented in like 1930, and from like 1930 to 1933, basically global trade collapsed, and then everything else basically started to crumble. After that, the bank's failures started, escalating in 1930, and it was basically just a cascading effect at that point.
Well, the tariffs, just made the situation worse. It was already a bad situation that was created, and the whole speculative mania of the latter part of the 1920s was created by the new Federal Reserve that kept interest rates too low and fueled a bubble in stocks and real estate. And they took too long to raise interest rates, and they pricked the bubble. And then we started to liquidate all those malinvestments. So, but the early part of the 20s were good. It was genuine growth. It wasn't until we got to the later 20s that the central banks, got involved.
No, true,
But
and
as
so
far as
it's very interesting because at 29, you like you said, we were at the speculative peak mania, right? And then the tariffs came at the back end of the of the boom of the bubble at that time, right? And so
yeah,
it's
and anything that restricts trade is going to be a negative, because it interferes with people's being able to buy and sell and maximize the value that they can get. I mean, there are a lot of gains from comparative advantage, and everybody benefits from free trade. And so when you start shutting down free trade, you lose those benefits. So that's a negative. But the thing that Trump got completely wrong is he's right to criticize our trade deficits. They are a huge problem, but they are a symptom of a problem. They're not the cause of the problem. They are a symptom of a deep underlying problem structurally in the U.S. economy that we have these huge deficits. And what he wants to do is say, well, let's get rid of the deficits by putting on tariffs. And that completely ignores the root cause of the problem. But what Trump also doesn't understand is that we rely on those deficits. Yes, those deficits are causing long-term problems, and they're actually causing shorter-term problems because we have to borrow money to finance them. And we go deeper into debt as a nation as the rest of the world uses their trade surpluses to buy up our income producing assets. They buy our real estate, they buy our stocks. So we're selling our cows to buy milk, right? But what Trump doesn't get is we're living off that milk. We don't even know
Right,
how to
right,
milk a
right.
cow.
Absolutely.
And it's like in the short run, we're living way beyond our means because
Absolutely.
these trade deficits are enabling it. Now we're trading long-term pain for that short-term gain. But the only way to fix the problem is to accelerate the long-term pain forward right now. See, Trump thinks, okay, yeah, we're getting screwed over by the rest of the world because they're not buying our stuff. He just thinks about it as a businessman. Hey, we're not selling our stuff. Well, we don't even have the stuff to sell. We don't
Absolutely
even
right.
make the stuff.
And
And
I
we
think what a
rely
lot of
on the
people
rest of the
don't
world.
realize with this, with and all, as a United States veteran and proud for everything to be American. I think the whole like bringing jobs back to America, like no one wants to work in I appreciate everyone who does work in a manufacturing, but no one like wants to grow up and be like, yeah, I want to work on an assembly line for like 40 years of my life. Like those jobs and are especially now are going to be more autonomous and robotics. And even if companies are bringing jobs back, or I should say production facilities back, manufacturing back, they're going to be automated anyway at that point. So it's really going to be like a net negative and no gain really for the
Well,
economy
I
going
mean,
forward.
well, the thing about the jobs, look, people don't get. We don't want jobs. We want the production that is associated with jobs. We want the productivity. The jobs are means to an end. And of course, people don't want a job. They want to be able to pay rent. They want to be able to take a vacation. They want to be able to buy a car. So in order to do that, they need a job. But the thing is, if we produce the stuff ourselves, then we would be able to hire Americans to do the work instead of having that labor supplied abroad. So it would be better if Americans who are not working went to work. Uh, particularly for the other Americans who are supporting the Americans who aren't working, if they're on welfare, if they're on other public assistance programs, we'd all be better off if those guys got jobs right now. But a lot of them, maybe don't want jobs. But when people have these factory jobs, they were pretty good jobs when we were a manufacturing economy. If you graduate, if you dropped out of high school in America in the 1920s, 1930s, 1940s, 1950s, if you were a high school dropout, you could get a job in a factory and get married and have a wife that didn't work and have 3 or 4 kids and support them without credit card debt. So capitalism created very good jobs for the working man.
Absolutely. And
Jobs
I
that
want to say my grandfather, who was a World War II vet, came back and was an electrician. And, my grandmother never worked, and they had 5 kids, 5 boys. And, I was in the 1950s and was able to buy a house in New York, and completely agree. And I think the inflation that we've been talking about today, a lot of that stuff is not being reported correctly because of, all the, the OER, this,
yeah,
hedonic. And
and
so that collapse is not really telling the full story of what's
on gold. But I think that's just because more people didn't come to that conclusion sooner, right? I think that we were able to kick the can down the road long enough to keep more people in the dark. And so my forecast, is taking longer, or took longer, is taking longer to play out because of those factors. But what I've been telling people is because of the successful can kicking, the actual problems, the underlying structural fundamental problems that led me to buy gold 20 years ago, right? Those problems are way worse than I thought they were going to get. And so it's going to be much more painful to resolve them, which also means it's less likely that we do it. And so that means the hyperinflation scenario that I thought was, a real, low probability event, where we wipe out the currency completely, that's a much higher probability now than it was. I mean, it still may be, not the most likely scenario, but it's a lot less unlikely than it used to be. And the only main wild card might be, when we can get the productivity from AI. But I you know I don't think that is going to kick in quickly enough to save us.
No, no, definitely. I mean, when you run those numbers, I mean, I was just looking at the annual deficit. I mean, by the end of this quarter, we should already be at 1 trillion for the annual deficit for this year, and I think we're on track for 2 trillion for the annual deficit budget for 2025. That ends in
No,
September.
the budget deficit. No, it's way more than it'll be like 3 to 4 trillion, and for the whole year. I mean, that's at the rate at
Well,
which
the
it is.
fiscal year, because the fiscal
Yeah.
year is September. I think we're on track. Last report was like 800 billion so far on a fiscal year basis.
Yeah, but is that may just be the official budget. I always look at the rate at which the national debt goes up. And the problem is the national debt is really not going up right now because we've exceeded the debt ceiling. And so there's all kinds of monkey business going on. And so we have no idea like how much debt they've actually accumulated.
Yeah, I know that's the scary part,
So
right?
what's going to happen is they're going to raise the ceiling and all of a sudden the national debt's going to spike by 1 trillion, maybe more.
Yes. So thanks, Peter. Till next time.
All right, take care. Who's up next?
Gold Rush, you're up next.
Hey Peter, how you doing? Well, just a quick thought. I had my own thoughts that I wanted to come up here with, but then you mentioned your gold mining thesis, and keep in mind that gold miners are impacted by the cost of machinery and labor. So
Yeah.
whatever you're making in the gold is being offset by the inflation that's impacting the company. Just want to throw that out there. But my question for you was, what are your thoughts on commodities like gold, silver, and platinum being traded on the blockchain? I know your thoughts on Bitcoin, but in terms of real world assets, so basically I would have a claim receipt on the blockchain. So in terms of commodities being traded that way, access to liquidity and yield and those types of things that you don't normally get by holding physical gold. I was just curious if you kind of looked into that and what your thoughts are.
Well, I mean, I know that there is the potential, and we'll see what the market ultimately delivers on that. But yeah, you could tokenize anything and trade it on a blockchain. You could, as long as you have a facility to store it, you can issue tokens that are backed by it, which, certainly to me is a much better use case than tokens like Bitcoin or, Fartcoin, whatever, that are backed by nothing, that are just, people just believe in them and think they have value and buy them on the basis of a greater fool paying more. So yeah, I mean, all that stuff can happen, but in the meantime, it's not really happening because crypto is just used as a casino because it's a lot easier for me just to create a coin that costs nothing. Look at all the money Wall Street is now making off of Bitcoin. I mean, it's free money for these guys. I mean, you launch a Bitcoin ETF. You don't have to do any due diligence. You don't need any portfolio managers. You don't have. I mean, you don't have to worry that the Bitcoin is going to come up with disappointing earnings because it has no earnings. It's already promised nothing. And it costs next to nothing to custody it. And they charge, 15, 20, 25 basis points. And they make a bunch of money. Then they trade it. They got this prop trading. I mean, they make a lot of money just buying and selling this crap. And so as long as you can make money doing crap, nobody really wants to innovate in any kind of real way. So I don't think we're actually going to know what, if anything, is going to come out of blockchain until Bitcoin and all these cryptos crash and people actually start thinking about a real use case for a blockchain. Because right now it's just to facilitate gambling. And as long as that's all you're doing, there's no air for anything else.
So HSBC, I mean, they do have gold on a blockchain. I'm sure you're aware of it, but it's
Yeah,
launched.
there are a few. Yeah, there are a few gold-backed tokens, and I've spoken to a lot of these people. I mean, it is something that I may eventually get involved in. But the problem is, everybody tells me there's no demand. Nobody wants it, right? Because there's no need for it right now. Nobody wants to buy gold on a blockchain. But the thing is, if we wanted to go back to using gold as money, then yes, you could put it on a blockchain. But if you just want to buy gold and store it, you don't need a blockchain. Just there's so many ways you could buy it. You don't need to buy a token. But all the demand for tokens is for the get rich quick scheme. And gold is not a get rich quick scheme. Although, actually, people are getting rich in gold. I mean, quietly, because gold is still so underpriced. So normally gold isn't, a way to make money. It's a way to preserve money. But we are in a situation where gold is so undervalued. And it's like things I can say, well, how can you say it's undervalued? It's almost $3,000 an ounce. Gold is the same as when it was $20 an ounce. It's the dollar that isn't the same. It's the euro or the pound. These currencies are being debased, and the rate at which they're going to be debased in the future is going to be much greater than it's been in the past. You can see, and that's because of the debt bubble exploding. And so that gold is now telling you that this is going to accelerate because our money is going to lose a lot of value, right? And it's not just the price of gold that's going to go up. The price of everything is going to go up, right? The food that we eat, the clothes that we wear, right? Everything is going to get much more expensive. Now, if you have gold, it won't. It actually will get cheaper, which is, the way it should be. But if you're holding on to these government created fiat currencies, you're going to get wiped out. I mean, that's why people should go. If you're listening to this, spaces, go to Shift Gold and just fill up a shopping cart. You could buy live right now. I mean, gold's only up $21 now. Back to 20. Silver is still negative. It's almost back to unch now. It's down 9 cents. It's sold off. I mean, I don't know what hit it. I can see the stock market futures are selling off a bit. I think it might be, Trump put on these tariffs today. This evening they announced, but they had been telegraphed all weekend and today. 25% tariffs on steel and aluminum. Now, what is that going to do in America? It's going to make steel prices, aluminum prices go up. How much they go up, it's hard to say. I mean, the tariffs are 25%. We make about 60 or 70% of our steel and aluminum domestically, but we don't have the capacity to make 100% of it. That's why we import. So now the domestic suppliers are going to jack their prices up. Maybe we'll get some extra production domestically, but we're just going to be paying a lot more money for steel and aluminum. The government will collect some of it in taxes, but but the prices, the higher prices that the domestic suppliers, the government doesn't get any of that. They only get the money from the imports. But while Trump wants to protect our steel industry, what does that do for our automobile industry? Now the autos have to buy more expensive steel. So American cars have to cost a little bit more. That makes them a little less competitive. So they're less competitive domestically. They're less competitive internationally when we export them. You go to protect one industry and you end up harming another industry. So that's why the government shouldn't protect any industries. The government should be neutral, and let industries compete, you know. Um,
Hey, Peter, I got a question for you, man. So, with all this gold and everything coming back over to the United States, I've heard a lot of people talking about, and it's happened before, I guess, a couple of times in the past, a revaluation of gold. Um, what do you think about that? Do you think they could possibly? I mean, I've heard people talking about gold, getting revalued up to $100,000 an ounce. I mean, is that reality?
well, they're only talking about revaluing gold because they think it's going to open up some free money. Like we could just revalue our gold and the government can spend it. They can't. I mean, we all know what the gold is worth, regardless of what they want to keep it on the books for. But they can't sell it. I mean, if they could, but then that's more inflation because they're gonna get cash and spend it, and we're gonna deplete our gold reserves, which is the only thing we got backing up our fiat currency. I mean, it's not redeemable. The dollar is no longer redeemable in gold, but we have gold reserves that we can sell if the dollar comes under attack. If the dollar starts to collapse, how would the U.S. government prop it up? We would sell some gold and buy dollars back. That's all we could do. I mean, other nations have foreign exchange reserves. We don't have any foreign exchange reserves. I mean, we do, but they're tiny. So our main reserves are gold. So we need that gold in case, you know, there's a run on the dollar. But if we just start selling it because we revalue it, and then the government prints the extra money and spends it, it just creates more inflation. It's not like, you know, some free source of money that we unlock.
Fair
All right,
enough.
who's next?
Me, I think I'm next.
Yeah, it's him.
Hi, Peter. I'm a big fan. I've been listening to you for like 15 years. So I was just wondering if this war with Russia and Ukraine ends, shouldn't like commodity prices go down because they are major commodity producers?
Well, I think commodity prices are going up because of inflation.
Yeah, I know about
But,
that.
you know, we haven't seen oil prices are not up. The war, oil prices aren't any higher really than they were before the war started. I mean, they went up initially, but then they came back down.
Yeah, but
but there could be a lot more demand, but yeah, I mean, wars use resources, they waste resources. I mean, it's better to have peace. I mean, it's it's more prosperous to have peace. But I think if there was peace in Europe, um, that would be bad for the dollar, and if the dollar starts to weaken, that's going to push up the price of commodities in dollars.
But everybody has been sanctioning both Russia and Ukraine, so the food prices have gone up a lot in Europe.
Yeah, but their stuff is still getting out there. People are still buying Russian oil despite the
Yeah, I know
sanctions. It's not like that oil is not on the market. Yeah, but no, I think prices are going up. I mean, it doesn't matter. There's war or peace. I mean, we're printing a ton of money, and that's not going to stop.
Yeah.
So, but in real terms, if you want to say to me, well, will some of these prices go down in terms of gold? Yeah, they could go down in terms of gold.
Yeah. The thing is, I own.
I mean, but oil is, you can get over $40 barrels of oil right now for an ounce of gold. I mean, oil is the cheapest it's ever been in history, other than, for a couple of months during COVID. Oil is dirt cheap right now. It's never really been cheaper. And people don't realize how inexpensive energy is right now. They think it's expensive because they're paying for it with their dollars or with their euros that have lost so much value. But it's not that energy has gotten more expensive. It's that the currencies have gotten less valuable. And so you need a lot more of them to buy energy. But that's also, one of the things I've been saying to these gold stocks. I mean, these gold stocks are going to see a big increase in their profits because over the last couple of years, I think the cost of mining has really come down. It hasn't really shown up yet in these earnings because they've been dealing with some other issues. But I think we're going to see, we get earnings reports in a week or two on a lot of these gold stocks. I think Q4 earnings are going to be good. And I think Q1 earnings are going to be phenomenal. I mean, I think the earnings in this quarter are going to be, the best that we've ever seen in the gold mining sector. So you want to get ahead of that. My gold fund that I've got is the Euro Pacific International Gold Fund, which you could buy. If you go to the website, europac.com, you can get information on it. But anybody who has a discount brokerage account, EPGIX is the symbol for my fund, the Euro Pacific Gold Fund. That's the no-load ticker symbol, EPGIX. You get at Schwab, Fidelity, E-Trade, Ameritrade, international brokers. I mean, all the discount firms have my funds on their platform. I think we've got a fantastic portfolio that Adrian Day manages with a lot of these junior mining stocks that are, that they're, we got them for steals. We've been buying them, and some of them we got on private placements, but we've got a great portfolio of these little stocks that I think are, real juniors, not the kinds that are in the GDXJ. Real little companies that could go 50, 100x. We've got a great little portfolio of these stocks in here. So if you're not in the mining sector, if you want, you want to speculate, that's where you should go.
Well,
just check it out. Your EPGIX is the symbol, and check out the prospectus. And it's risky. Obviously, gold mining is a risky business, but I think the rewards are worth the risk.
The thing is, I own a lot of stocks in Russia in the oil sector, but I got locked out because of this conflict, and I can't access them.
Yeah, I mean, there are a lot of stocks. We sold some. I got caught with one. I owned it, and I never sold. I was stupid. I should have sold it, but I still have it. Hopefully, I'll have some. But I own some Norris nickel that I still have.
Yeah. Thanks, Peter.
And so, yeah, hopefully one day I get my property back that was illegally deprived from me by the U.S. government.
Yeah, we should be
All
getting
right.
so much dividends from them. Thank you, Peter.
I mean, it was great. It was a great thing for Russia that that the U.S. government said all the shares that Americans have are worthless. Okay, great. So they got all their company back for nothing. Right? The Americans get screwed. We screwed ourselves, right? We didn't screw the Russians.
Europe did the same thing. All those stocks are like frozen in time.
Yeah.
Thanks, Peter.
All right, who's up next? I'm getting close to midnight here in Puerto Rico, so I wanted to just do it till about 12 o'clock.
Let's go
So who's next?
Justin, then Raymond, then Daniel.
All right, can you hear me?
Yeah.
I mainly had questions about recently there's been talk of auditing the Federal Reserve, and if the Chairman Powell is uncooperative, maybe even ending the Fed, which I don't see that happening. But if they were to abolish the Federal Reserve, I don't think they'd go back to a gold standard. So what would be the other options? Would it be like a nationalized bank like Germany or Japan had in the 30s? Or how would they do that to where they could still kind of print money, but they would end the Fed?
Well, the reason we have a Federal Reserve is because it's unconstitutional for the U.S. government to do what the Fed does. And when the Fed was initially established, of course, it was a private banking syndicate, and the Federal Reserve notes were legitimate notes. They were redeemable in lawful money, which was gold. And like if you had a 20 Federal Reserve note for $20, it entitled you to 1 ounce of gold minted by the U.S. government. And the Federal Reserve had to have on its books, in order to issue that note, it had to have 100% commercial paper. So what the Fed would do is they would rediscount commercial paper from other banks. So they would take the note of another bank and rediscount it with their own note, and they had to have another 40% gold backing. So even though the notes were 100% redeemable in gold, they didn't have to have 100% gold behind the note. They can hold 40% gold, but they needed 100% commercial paper. So the Federal Reserve note was actually a high quality banknote at the time the Federal Reserve was created. And the Federal Reserve system was not allowed to own any obligations of the US government. So they couldn't own any treasuries, right? Now they say, oh, we have to only own treasuries. Initially, they couldn't own any. And in fact, if they proposed the Federal Reserve Act and they said that the Federal Reserve could own treasuries, they never would have gotten the votes in Congress. They would not have enabled the Fed under that. The only reason they did is because we were dumb enough to get into World War I. World War I was such a disaster for America because not only did World War I give us the Federal Reserve, right, or give us the expansion of the Federal Reserve into owning treasuries, but World War I is why we had World War II. Like if America had never entered World War I, there never would have been a World War II. There wouldn't have been a Nazi Germany if it wasn't for America getting into World War I. We created that whole thing because we meddled in the First World War. We should have stayed out of that. Now, of course, the people who brought us in, Woodrow Wilson, and all the guys that got us into World War I, they obviously had no way of knowing that it would lead to Adolf Hitler and World War II. So, I mean, they didn't know that. But, we know it now with the benefit of hindsight. But it was there was no reason for the U.S. to get involved in that war. But politicians dragged us into it. So a lot of bad things came out of it. But they used that to expand the power of the Federal Reserve. And now, the Federal Reserve is an engine for government debt. But we're not going to, if we got rid of the Federal Reserve, we'd actually probably be worse off, because if we got rid of the Federal Reserve, we would probably just let Congress print all the money, even though it's unconstitutional. Now, maybe the court would strike it down, but I doubt it. They kind of let the government get away with murder now, because the Constitution doesn't really mean what it meant back in 1913 when we established the Federal Reserve. We still had respect for the Constitution. People stood, the Supreme Court still understood the Constitution back then. But we don't want the government to print the money, because they'll probably be even more inflationary than the Fed. I mean, the Fed isn't really independent, but it's got to be somewhat better than just letting Congress or the White House have the printing press. But if we could reform the Fed and get it back to what it was supposed to be, that would be a big improvement. Or if we can get rid of it completely, but also make sure that the government doesn't assume the responsibility. If we go back to the way things were before the Fed, we would go back to private banks issuing currency. So people would have in their pocket notes from Bank of America, Wells Fargo, right? Citibank, right? That would be our notes.
Well,
Although we might not even need notes, that they could issue it, electronically. We could, they can have it on on a ledger or on a blockchain or whatever. We wouldn't need the paper.
well, did the
But
Federal
we
Reserve
don't
Act,
need the Federal Reserve. We don't need the, we don't need the government to have money.
the Federal Reserve Act also it enabled fractional reserve banking, didn't it?
Well, what really enabled fractional reserve banking was FDIC insurance. I mean, you're always going to have some fractional reserve banking, but in a free market, you're not going to have banks that keep too low a reserve, because there could be a run and the bank could fail. And this also happened during the Great Depression. Roosevelt introduced the concept of deposit insurance, which created a massive moral hazard in our banking system, which is why it's so over leveraged and why the whole system is basically insolvent right now. So if we didn't have any government insured bank accounts, banks would keep much larger reserves than they do. And that would be a good thing. Who's next?
One last question real quick. If hypothetically, if we went back to a gold standard tomorrow, 1910, since we don't produce anything, wouldn't all the gold just leave our country as we imported goods?
Well, yeah, I mean, if the trade deficit didn't go away, but if we went back to a gold standard and we allowed the market to set interest rates, and I think that we'd have to have massive cuts to government spending, because the government wouldn't have the ability to spend the way they're doing now. And I think that the trade deficit would come down. So I don't think we would just spend all of our gold. I think that we would spend, we would have to start producing stuff again, and it would take some time, and so Americans would have to consume less.
So
Credit cards would go away, and right now so much of what we consume is just put on a credit card. I mean, look at credit card growth. Last month was set a new all-time record. We took on like 40 billion of credit card debt in December. Just crazy. We wouldn't be able to do that on a gold standard. So we wouldn't be able to buy all those imports, because we couldn't get all that credit.
but that would be extremely deflationary, correct?
In terms of gold, of course, yes. If we went back on a gold standard, the price of gold would go way up, which would mean the price of everything would come down, right, in gold terms, if we went back on a gold standard. But people would, people would not be able to afford all that stuff, because they wouldn't have the purchasing power right away. But it would, it would be a big benefit to go back to a gold standard. And either we have to allow massive deflation to do it, or we have to just push the price of gold way up.
All right.
But one way or another, we have to adjust the price level to the supply of gold. And so prices, either the gold price has to go up a lot, or the price of everything else has to come down a lot.
All right, let's go to
Hey,
Raymond.
Yeah.
All right. So Peter, thank you so much for taking my question, and I'm really appreciative for all the work that you've done and the time that you spent with us today. So I'll try to make this quick. So on that point, there's a video that has been circulating on X lately of Scott Bessent with Donald Trump in the Oval Office, where he has stated that in the next 12 months, they'll be looking to monetize the assets on the U.S. balance sheet. And this comes on the backdrop of also Judy Shelton tweeting out today that it's time to make the dollar as good as gold again. So when you hear that, what's the first thing that comes to mind? And then I have a follow-up question, if you don't mind.
Well, first of all, monetize the assets on the U.S. balance sheet. What assets are they referring to?
And that's exactly the question I'm proposing to you, because that's the speculation that's going around that we have that no one has a clue about. So that's the $1 million question I'm asking you, Peter.
Well, I don't know what I mean, the only thing the U.S. government really owns is a lot of land, right? And so other than the gold that we have land, right? I mean, a lot of the land in the country is owned by the U.S. government. I mean, so the U.S. government could start selling off land.
Well, hold on, but I should follow up by this, but that Scott Bessent said even liquidable assets.
Well, the only liquid assets that we have would be our gold reserves.
Okay, so having said that, do you not find that quite interesting coming from a Treasury Secretary at this moment in time? And then the question is, what could they have in mind?
I don't know. I mean, but I mean, if they're going to sell the gold, right? They're not. I mean,
because
I don't understand.
Well, because you just said that they would have to revalue the gold at some point in the previous question that was asked you, right?
But right now, the gold is still on the books at $42.20.
Exactly.
Right. But if they revalue it to market,
right,
it's $2,900.
Perfect.
But at $2,900, the amount of gold that we have can only pay off a small part of our national debt.
100%.
So the only way we could pay off more of the national debt would be to make that gold worth $30,000 or $40,000 an ounce.
Okay.
Right. I don't know what it is.
Okay. So is that such a far-fetched or unplausible situation when you consider the fact that Donald Trump is going and saying, I want to have Canada as the 51st state. I want Greenland. I want to rename the Gulf of Mexico. Like, could it not be in the realm of possibility that could be an option?
Well, I think a lot of this stuff is just Trump talking about, and who cares, what the Gulf of Mexico is called? I mean, that's like not a big deal. But if they're going to try to come out with a plan where they revalue gold, I mean, it basically is a default on the debt. That's really what it is. Because if we're going to tell our creditors, we're going to pay you off, right? You owner of a U.S. Treasury, right? We're going to pay you off, but we're going to pay you off in gold. We're not going to pay you off in dollars,
right?
But the gold that we're going to give you, because the U.S. government determines how much the dollar is worth in terms of gold.
Exactly.
So basically, if we say gold is worth $30,000,
right?
And so we're going to repay you in gold. Basically, what we're doing is we're massively inflating away the debt. It's a massive default because we've devalued the dollar, right? And we're giving our creditors our gold, right? And so we could do that, and that obviously would make the price of gold, because that'd be it. But what it really is it doesn't mean the price of gold has to go up that much in other currencies, but in terms of dollars, that's exactly what it means. But it also means the price of everything is going to go up. So if gold is 30,000 an ounce, copper is going to be way up, nickel is going to be way up, corn, cotton, everything's going to be more expensive.
Right.
It's not just going to be gold.
I understand that, Peter, but then at that particular point, your prophecy has come 110% true, because that's exactly what you've been saying.
I mean, what I've been saying in a different way.
Exactly.
What I think we should do, I think the U.S. government should honestly default.
Exactly.
I think the U.S. government should just say, look, we owe $6 trillion. We don't have it. We can't pay it, right? Interest rates need to go up in this country, maybe 10%, 12%. I don't know where they need to go, but wherever they need to go, we can't afford to pay our debt. So we need a restructuring. We need a default because we have to find a way to allow interest rates to go way up, but not collapse everything. So we have to default on debt. But we also have to, and I've said that it's not fair because we have to cut Social Security, we have to cut Medicare, we have to cut government pensions. So it's not fair to tell people you're not going to get your Social Security, but the people who own government bonds are going to get 100 cents on the dollar. That's not fair. I think we have to spread the pain among everybody who is owed money from government. Everybody who is expecting to get something from the government is going to have to give up something because the government is broke, right? And so it can't make good on these commitments. So I think that's much better than destroying the value of the dollar and wiping out everybody. But right now, that is where we're headed.
No, I understand.
But I know Scott Bessent, owned a lot of gold. I know that he worked with Jimmy Rogers,
Yes.
when they both worked with George
Yes.
Soros. So he's probably a pretty smart guy. If he and I had a conversation, we'd probably agree on a lot of things privately, So and for all the bullshit about him being a crypto guy, I'm sure he thinks Bitcoin is as big a scam as I do.
Oh, 100%. Bitcoin is definitely a big scam. But at the end of the day, I want to say thank you very much for your time, Peter. But I find it very interesting. I find it very interesting that at this moment in time, that the Treasury Secretary would say something like that, because there's really not that much on the U.S. balance sheet that would be considered assets. So it just makes you kind of wonder where their heads are at and what they're thinking. So, but God bless you, Peter. Thank you so much for your time and everything that you do for the community and for everyone on this call. Okay.
Thanks a lot.
Take care, sir.
Daniel, you're up.
This is wonderful, Peter. Thank you for co-hosting Silver Degen. Peter, I'm new to this party. I'm 43 years old. I'm in New York, and a friend of mine in Chicago told me you're the absolute best and to pay attention to what you say. And not only have I been doing that, but I've been having a good chuckle as I listen, because I didn't expect, honestly, to hear what you were saying and what you are saying, and it's like a breath of fresh air, not just because the price of gold is going up or may go up more so just because you're a normal guy who speaks truth, and much respect, dude. I don't even have a question other than to say recently I got into some Newmont calls that are like absolutely through the roof, and it's freaking hilarious to me, actually, and I think it's really cool. I'd love to hear your thoughts on them and where you might see the future going with earnings being on the 21st, et cetera, et cetera.
Yeah, look, I think for people who, are, like to gamble in options, I mean, I'm sure there's, I think people can make a lot of money buying calls on these mining companies. You can pay for it by selling puts. I mean, I think they're really cheap. But they're not for everybody. Options aren't for everybody.
But gambler. So
yeah.
you made me laugh.
But look, I mean, look, I think the big money is going to be made in these mining stocks. I mean, I've thought that for a while, so it's not like this is the first time I've told people to buy these mining stocks. They've been cheap for a while, but they've never been this cheap. And I think it's amazing that people could buy a lot of these stocks with $3,000 gold. A lot of these stocks are cheaper than they were when gold was at $1,000. And people thought it could never get to $3,000. Yet here we are, and we're going a lot higher. So I think people are going to make a lot of money. In fact, I think you're going to see Bitcoin-esque type returns in gold mining stocks. Except this is going to be a real deal. This is going to be these companies are going to be extremely valuable because they're going to literally be gold mines. They're going to be mining money. That's what gold's going to be. People are going to need gold, and the companies are going to be buying back stock hand over fist. They're going to be raising their dividends. And the thing is, when gold and a lot of these metals, when these prices take off, gold, copper, nickel, it takes a long time to bring a new mine on the stream. I mean, it's not like you just snap your fingers. I mean, normally supply and demand, price goes up. Okay, let's have more supply. It ain't going to work that way. You know where the supply is going to come from? People are going to melt down their jewelry. That's where some of the gold supply. It's not going to come out of the mines because it's going to take too long. But people are hurting. People need cash, and all of a sudden, gold is $10,000-$20,000 an ounce, and they got a ring that they don't really care about, and they can pay the rent. They'll sell it.
Well, Peter, I have
But
on a 100-gram gold chain right now with like a 12-gram cross on it, and so I hope I don't have to sell it.
yeah, well, you might not be in a position where you have to. I'm talking about people that are going to be looking through their their drawers, their dresser drawers, for whatever old jewelry they got from their grandma, because it's going to be very valuable.
Okay, thank you very much. Lastly, and because I won't take up a lot of time, I hear people talking like crazy numbers for Newmont, like $80, and saying that I'm just happy if it goes above 50 or retraces to the latest high of 56, which I think was
Yeah,
December.
Newmont mining is lower than it was in 2005 when gold was at like 500, 600. So I mean, Newmont has gone nowhere for 20 years, and the price of gold has gone up tenfold. So yeah, I mean, the stock is really cheap. I mean, I think it's trading at less than 10 times what 2024 2025 earnings. I think the stock is probably trading at probably 7 or 8 times what it's going to end up earning. I mean, if you look at, it's trading at about 14 times what the forecast earnings are. But I think those earnings are way, way pessimistic. I think Newmont's going to earn a lot more money than Wall Street thinks. So, I mean, I think these stocks, I mean, I think it's very cheap. And I think that Newmont is going to become expensive in a couple of years. People are going to start paying up for the earnings growth that they expect. And so 80 is not crazy. I mean, it could be 800. It's just not going to be there, in time for the expiration of your call options, probably. But I mean, it's going to be a much, much higher price. All these stocks. I mean, imagine where these stocks are going to be when institutions want to buy them. MicroStrategy is worth more than all the gold mining stocks in the world combined. And what the hell does MicroStrategy do? Nothing.
Hey,
It owns nothing.
Peter, do you see all those Bitcoin people? If the price like going into gold, which will raise the price of gold, no?
It will raise the price of gold. But what about gold stocks? When people want to add gold stocks to their portfolio, when pension funds, when endowments, when investors want an allocation, even a 5% allocation to gold mining stocks, that money alone will probably 5x the mining stocks, maybe more.
Thank you, Peter.
Yeah.
Peter, what event has to happen for that capital rotation to move inequities into the mining sector?
I don't know. It's kind of like, somebody has to say the emperor has no clothes. I mean, how high does the price of gold have to go before people realize? Now, I think some of these mining companies have to come out with some blowout earnings numbers. It's going to have to happen. And I think some of these companies like Newmont are going to have to up the size of their share buyback, up their dividends, because the yield on Newmont right now is about 2%. So it's not like, oh, wow, that's a fantastic yield. But if it can up the yield to 4 or 5% and announce a major stock buyback, that might, get these stocks on people's radars. That's going to happen.
Do you think there's a chance that U.S.-based mining companies will get added to the sovereign wealth fund?
What sovereign wealth fund?
The fund that Trump has spoke about for America.
Yeah, that's just a bunch of nonsense. We can't. We have sovereign debt. We don't have any money for a sovereign wealth fund. We're broke.
We're not going to borrow money.
There's no money to
We're
buy.
not going to borrow money to buy my equities in mining.
Yeah, so it would be a sovereign hedge fund. So we're just going to leverage ourselves up by issuing debt, and who's going to buy that debt?
That's the
The
American
problem
way.
is we already have too much debt. Yeah, look, this is all that's a bunch of nonsense that we're going to have a sovereign wealth fund. We got to start paying down our debt. But I mean, I wouldn't even want the government having a sovereign wealth fund. I mean, let individuals make their own investments because the government doesn't have any money. It has to take it from the private sector. who wants the government making investments?
No, Peter,
That's not what the
the
government.
best thing you said was just tell the Federal Reserve to go fuck themselves, basically. Just tell them we're sorry, we can't pay you back. I've been saying that for years.
Well, that's not the well. That's what we tell the other country. The loan does the money. Anyway, who's up next? I got to get. I'll stay till 12:30. Then I got to go. That's 11:30 Eastern.
All right, let's go to Ryan, then Sean.
Right.
Hey, Peter. This is Ryan. Hey, long-time listener. Great to hear your perspective. I was just curious, what are you going to take more enjoyment out of, if gold going up a whole lot, or Bitcoin crashing down, and talking to Michael Saylor and all those guys?
Well, Bitcoin crashing would be a very good thing, and it's not that. Look, I'm going to be happy that people are losing money. And I actually feel very badly that a lot of people are going to lose money. That it's unfortunate, right? That people are going to lose money because they were misled. They got suckered into the mania. So I'm not happy that people are going to lose money, but the sooner people stop putting money into this Ponzi scheme, the better. I mean, it's a major distraction. It's a major misallocation of capital and resources and labor. I think the whole crypto industry is doing tremendous damage to the global economy and now to the U.S. economy in particular. So the sooner this madness comes to an end, the better, right? But yes, that means people are going to lose money. But more people will lose more money if it continues. So if Bitcoin is able to go to 1 million, a lot more people will lose money. If it crashes now and it doesn't go any higher and it just goes straight down, yes, people will lose money, but it's better than more people losing even more money if it happens later and then even more damage done. So, as somebody who cares about the country, the sooner this craziness can end, the better. And as far as gold, yeah, I mean, I know gold's going to go up because I know the dollar's going to go down. I know the euro's going to go down. And yeah, I mean, I'll be a lot richer when these gold stocks move up because I've kept half my portfolio in gold stocks for the last 20 years. And I've maintained that because I keep buying more gold stocks. And then when the gold stocks are more than half, I buy value stocks and dividend paying stocks. But obviously, I'd have a bigger portfolio if I hadn't had as much in gold stocks. I mean, but I think at the end of the day, I'm going to end up making a lot of money off those gold stocks. Now they've done well in the last year. I mean, they're up about 50%, right? My gold stocks in the last year. So that's been pretty good. But I still have a ways to go to catch up to the S&P.
Absolutely. Yeah, appreciate it.
All right. Who's up next?
Sean.
Yeah, it's interesting. You're talking about the melting silver or melting gold. Even at $3,000 gold or even $2,500 gold, we melt probably 95% of the jewelry that comes into the store. It's just not worth it to resell it. There's just not a big market for used jewelry. I can't even imagine what the jewelry business looks like at $10,000 or $20,000 gold. I mean, who goes in and buys a 14-karat wedding ring for $9,000? What do you think the impact is on even like the jewelry business? I know it's a tangent, but what do you do with $50,000 gold in the jewelry business?
Yeah, well, jewelry is going to be more expensive. That's just going to be, and there'll probably be more people buying 14 karat gold instead of 18 karat gold. And people may buy less gold jewelry, or they'll buy, chains will be thinner, stuff like that. But yeah, jewelry is going to get more expensive, but people are still going to buy it. It's a luxury item. I mean, look, people shell out, $10,000 for a handbag.
Yeah,
So
I guess it just goes back to being truly a luxury item. Because I mean, even thinking about the amount of gold in a Rolex, and what a gold Rolex would cost when gold gets
well,
those
a gold
numbers.
Rolex now. I mean, I think I think like I have a day Rolex, a gold one, and So I think when I bought that watch, I think it was about $30,000 new, and I think there is probably about $6,000 or $7,000 worth of gold in it. You know,
That is a good point. There's a huge
so
profit margin in jewelry that can absorb a lot of the price.
yeah, I mean, but and they yeah, and most gold jewelry, you know, it's you pay $1,000 for a gold ring that's 14 karat gold or 18, and you know it's probably $100 worth of gold in there. The gold Rolex actually is 18 karat, and there's a lot of it's a thick watch, so there's actually a lot of gold in there. Um, but if gold goes up 10 times, the jewelry won't go up 10 times, you know, unless you're buying like Monet jewelry, you know, where it's 24 karat gold. I've got, you know, quite a bit of that. My wife has a lot of that. She really likes it. And that's, you know, 24 karat. So that will go up, you know, pretty much with gold. But you know, and yeah, these department stores, they mark up the jewelry, you know, tremendously. So the markups will probably come down in order to keep people buying.
Yeah,
But the prices are going to go up a lot. But you know, like when gold was undervalued, like when gold was when they had the price controlled at $35 an ounce, and it was illegal to buy gold, they were overusing gold. I mean, people were having silverware plated in gold. I mean, we used to have it when I was younger. My parent, we had gold plated silverware because it was so cheap. People were using gold all over the place. And so when gold gets expensive, you know, people aren't going to do it.
Yeah,
People are going to, you know,
it's already flooding in at this new $2,900 mark, and like you said, a lot of that supply is going to come. But you know, people can put it down. I guess it's just amazing how much is coming out of people's houses, even at $3,000. You know, we're trying to keep up with just enough money to buy the gold that's coming through the door, and I can't even imagine what the world looks like if it goes to 5 and 10,000. I don't know where I'm going to get the liquidity to keep buying it.
yeah. Yeah. I'm watching we own this company in our funds. I own a bunch of it myself, Northern Star Resources in Australia. So it's up at a new 52-week high tonight, up, you know, a little over 4%, 4.3%. Um, but yeah, I used to have a lot of gold mining stocks in Australia. They all got bought up. They all got bought up and merged. Newcrest Mining, Lihir. I forget all the ones I used to own in Australia. Now I don't have that many left anymore because they all got bought up.
Peter, what do you think
But
about the gold to silver ratio? Like, am I crazy for, I think last week I sold a bunch of
we're
gold.
at 90. We're at over 90 to 1. There's no doubt in my mind we're going to go below 30 to 1 at some point. So, you know, so silver is going to go up. So when gold is $10,000 an ounce, where's silver going to be? You know, it could be 500, or I don't know. I mean, I think there's going to be a big move in silver, proportionate. I mean, I think that, you know, the pendulum is going to swing. You know, it's going to revert to a mean. But I think the fact that silver is so cheap right now is the same reason that mining stocks are so cheap. And of course, a lot of these mining stocks also have silver. You know, most gold mining companies have some silver. There's some companies that are, you know, predominantly silver, and I own, you know, one of my biggest positions I own personally is Silver Wheaton. One of the biggest positions I own, and that one has done really well. It's a royalty company in silver. But you know, there's some companies that are more of a pure play on silver. Although even the pure plays still have some gold and other metals that they mine.
So
Uh,
it's a purely degenerate on my part, Peter, but I took my life savings and put them in Hecla mining call options, thus the name Silver Degen. What do you
yeah.
think? Am I bankrupt this year? I mean, they're
I
spread
don't know.
out
I
over
hope
the
not.
year.
Look, I think you know, again, I've thought this before, but I've never seen a situation where the fundamentals, the technicals, you know, the sentiment, everything, you know, was more bullish. And nobody owns these stocks. I mean, I'm probably one of the largest owners. I mean, I'm not the largest, but I mean, maybe I'm in the top 1,000 of like individual owners of gold mining stocks. So there's like, you know, not that many people have, you know, the kind of money I have in these stocks because they all have their money someplace else. So so I just think there's a lot of room for them to go up because nobody owns them yet.
And Paul, did you have something? Paul Addison?
Yes, thank you. Um, hey Peter, how's it going? Couple quick ones for you. I've heard you talk recently about Japan and the situation with the rising yields in Japan. Could you just unpack that a little bit more? Like, I agree, when you look at that chart of, like the 10-year JGB yield, it is heading in a troublesome direction. And like, just can you just unpack that a little bit more and why that's so problematic?
Yeah, well, the yields are at a 15-year high again tonight in Japan. But they're still low at 1.31%. But you're talking about an enormous amount of debt. The Japanese debt to GDP is something like 250%. And so the interest cost is going to soar. The CPI measured inflation in Japan last year was 3.6%, and it's going to be higher this year, I think. So you're talking about at least a 4 handle on inflation, and you've got a 1 handle on yields, right? So that doesn't make any sense. Why would anybody want to loan money for a yield that's so far below what they're losing to inflation? So interest rates have got to go up. And it's these low rates that have been fueling the yen carry trade all around the world. So I think it's a big deal. And I think the Japanese government is going to have to start liquidating treasuries to pay down their debt.
Like CG think, exactly. So like, if this really starts,
they're our biggest creditor. The Japanese government has like 1.3 trillion, I think, worth of treasuries. And so they have a positive carry on that because they're earning more on their treasuries than they're paying on the JGBs. But if the yields on the Japanese bonds keep rising, that's not going to be a positive carry for them either. And what they're going to need to do is repay some of their debt. And so how do they do that? They just sell their treasuries, right? And then they have to sell dollars. And so that's going to be a big thing for the U.S. And not just the government, but the Japanese own. There's a lot of assets around the world that have been bought with levered yen.
Yeah.
And so those trades have to be unwound. That those yen liabilities have to be repaid.
Yeah, it just it just feels to me like it's it's a bit of a slow process, and you have to be patient with gold and the way this is going. But it just feels to me like gold is in the process of reasserting itself and reclaiming its rightful place as the preeminent tier 1 asset of the world. And sorry, go ahead.
Yeah, and I want to just wrap this up because I started this call too, and I'm looking at gold going up 20, up 30, up 40, and I'm like, oh shit, is this are we going to finally run? And no sooner do I start the call than it starts to sell off.
It got bitch slapped pretty hard.
Gold, the gold. I mean, gold is still up. It's still trading above the close. It's trading above 29.20, but it got to like 29.40. And and silver ended up getting slapped and went negative. I mean, it's down about 13 cents, but it looks like the market settled down. But I still think we can have a big day tomorrow. But the key is going to be Wednesday when we get these CPI numbers.
Yeah.
And if we get a hot CPI and gold goes up, it's going to go way up.
Like at what point are people going to stop saying, oh my God, the Fed's going to have to raise rates, and go, oh shit, like, we bet.
No, they don't say that. They don't say the Fed's going to raise rates. They say this could slow down the next cut. And somehow that's bearish for gold because the Fed's not going to cut as soon as people thought. But at some point, people have to realize that high inflation is good for gold. It's not bad for gold. It's good for gold. High inflation is not good for the dollar. It's bad for the dollar. And we're going to keep getting, I know there are a lot of people who think that the inflation numbers are going to come down because they expect rents to come down. And eventually rents are going to come down. There's no question about that. But what's going to go up is food. Food's going to go way up.
Yeah.
and a lot of things are going to go way up, right? Insurance, the thing. So yes, rents could come down, but you know what won't come down? Your utility bill. Utility bills are going to go way up. I said the insurance, so overall prices are going to go up, even if we get some relief on the rent front.
Yeah, it's amazing to me like when I listen to like the Fed press conferences and like all these journalists are in the crowd, and they're all like taking this seriously and like saying like, okay, so we've got the CPI at 2.9. It's like, do you seriously think that's true? You seriously think the CPI is at 2.3 or 2.4% or whatever? Like, are
Look,
you?
all the numbers are all pretty much made up, just like the jobs numbers or the GDP. And the Fed is like, well, we make our policy based on this data. Yeah, the data is all bogus.
Yeah, it's
Who gives a shit about the data? Why, all you should do is look at the price of gold. Set your policy off the price of gold. When the price of gold is almost $3,000 an ounce, that means you're way too freaking easy.
yeah.
Right? I mean, that when Alan Greenspan was Fed chairman, he said that his most important tool was gold. He said if gold is getting close to 400, it means he's too easy. If it's getting close to 300, he's too tight. He kind of liked to target it around $350.
Right.
So if 400 meant he was too easy, what does 3,000 mean?
Yeah. Okay. My last quick thing is, why is there's different opinions on the dollar. I'm sure you've heard of Brent Johnson and the dollar milkshake theory. Why is
I know Brent.
Yeah, he lives in Puerto Rico. Yeah. What
he does?
Yeah. Why is Brent Johnson wrong on the dollar milkshake theory?
Yeah, well, that would take a lot longer than I got now, but
Nutshell it for me, Peter.
Yeah, and so far, the dollar has gone up for, some of the reasons that Brent lists. But the real problem with the dollar milkshake theory is that it just focuses on the dollar denominated debt and doesn't look at who that money is owed to, because it's not owed to Americans. It's money that somebody in Germany owes to somebody in Switzerland, or somebody in Brazil owes to somebody in Chile, right? So it's all outside the U.S. And he focuses on, people are they're going to need these dollars to pay their debt. Yes, but when they pay their debt, the people who get the dollars aren't going to want to keep them. So it's like, because I'm living in Germany, and I loan somebody money in dollars, and then they pay me back, I'm not going to keep the dollars. I need to convert them back to euros so I can pay my bills, pay my employees, pay my my mortgage, whatever it is. So it's not just, people have borrowed in dollars. People have loaned in dollars too, and they're not Americans. The money is not owed to us. Right? We're the world's biggest debtor. We owe everybody. So these are dollar assets and liabilities that exist totally outside the United States. But I think that what's going to happen is, as the dollar does go down, and it will go down, it's going to make those dollar denominated debts a lot easier to service and repay. But it's also going to make people not want to lend in dollars anymore. Yeah, people are going to want to borrow dollars because it's like free money, because I borrow the dollar and I pay it back when the dollar is worth less. But people are going to be, I don't want to loan dollars because I don't want to wait to get back cheaper dollars. So they're going to move away from the dollar, right? And that's part of de-dollarization. That's part of, the end of dollar, dominance, hegemony, whatever they call it. It's going to end. And then our standard of living collapses, because we've been riding on the dollar gravy train. We've been able to afford $1 trillion a year trade deficits. It's not easy to produce goods. It's much easier to consume them. And we've been able to consume goods that we didn't produce because the world's been willing to accept our paper. And it's a lot easier to print dollars than to produce goods. And we don't even have to print the dollars anymore. We don't even need ink or paper. We just create them, electronically. So it's completely free.
Yeah. All right. Well, that's that's it for me. I just want to say, I've learned more from listening to you than anybody else, Peter, and I appreciate you doing these things. And
all right. So everybody, I appreciate. And who is it that helped me out as the co-host here?
Silver DGen. Peter, you should definitely follow me, and I'll help you anytime you need hosting.
Yeah, I don't know why I couldn't connect with Paul. I'll have to ask him about that. I mean, that was the plan because Paul actually works for me. I couldn't get him on.
I'll send you my W-9.
But yeah, so I'm going to do a podcast. My plan is to do a podcast on Wednesday because Wednesday we get the CPI. So I'm going to do something, Wednesday evening to discuss the numbers, the market reaction, gold, and stuff like that. But yeah, this didn't turn out to be the big runaway that it looked like it was starting to, but it's going to happen. I mean, I bet the high that we hit this evening is going to be taken out tomorrow during the New York trading. So it's probably a dip to buy. And I think silver is going to end up positive. I think it's going to be positive on the day. We'll see what happens, but it's down 16 cents right now. All right. Thanks everybody for listening. Have a good night. I got to go to sleep. It's late. We're an hour later here in Puerto Rico, so it's already 12:30. All right.
Thanks, Peter. See ya.
Bye-bye.